Not at all.
Well, before we get to the wider economy, let's have a look at what all this activity has done to the markets. The FTSE 100 share index closed up 100 points. In New York, the Dow Jones closed up more than 300 points after the Fed's reduction of interest rates. Against the euro, the pound was up. Against the dollar, the pound was also up. Stephanie Flanders is here, and so is Richard Lambert, now of the CBI, formerly of the Bank of England's Monetary Policy Committee. We're also joined from Washington by the economic commentator, Irwin Stelzer of the Hudson Institute. Mr. Stelzer, good evening to you. What do you make of what the Fed did today?
Well, I think that Chairman Bernanke had to walk between, I would say, a northern rock and a hard place. He had to both satisfy the expectations of the market, not dash them completely. He had to, at the same time, try to avoid this so-called moral hazard, rewarding improvident lenders and borrowers, and probably came out with the right combination, adding a dash of liquidity by lowering the discount rate as well. He also, there was some pressure on him to produce a unanimous vote on the committee, and I suspect if he were king, if he didn't have a committee, he would not want to have cut the discount rate quite as much as he did. But in all the circumstances, I think he succeeded, and at the same time warned people that he hadn't forgotten about inflation, so they better not expect him to keep cutting rates automatically. He would have to look at circumstances as they develop. All in all, a tough decision and quite a reasonable one.
Richard Lambert, tough, reasonable, and perhaps with implications for what Bank of England will do next month.
Well, a very abrupt change of direction by the Fed in the last month, and some risks on the inflation side as a result of all that, I think. I think we're in a slightly different place here in the UK. The economy here is still strong, and there's no inflation is, there are still inflationary risks in the system. I think that if it were other circumstances, if there weren't all this stuff bubbling along in the financial markets, people would not be looking for an interest rate cut in the near future.
Is there some risk to the Fed's credibility, Stephanie?
Well, I think if there's a perception that he put the markets first before and increased fears of inflation, that will hurt credibility. And it was interesting to see the reaction in the markets as we saw the stock market cheered and short-term interest rates fell, but actually long-term interest rates and gold all went up because there was perceived to be an increased inflation fear. And more generally, he's given this perception in the last month that he's allowed the perception to gain root that he had promised the markets a rate cut. He had himself pictured with senior legislators and Congress. These are things that have possibly hurt his credibility because he seemed to be sort of boosting the market too much.
Well, just pick that up, Irwin Stelzer. I mean, when we've heard from the Tories talking about the decade of debt in Britain, we've heard other people say the core of this problem is easy money and bad lending of various sorts. How does it help things to reduce interest rates and, in the case of Northern Rock, to appear to be bailing out a bank which took some wrong decisions?
Well, as I said before, I think if he had his own way, the chairman would not have cut by 50 basis points. But he had to, and I think he did badly manage the expectations of the market, and he let it just run away with the notion that he was going to do this, and if he didn't, all hell would have broken loose. On the other hand, I think he retrieved a little by reminding people that the economy was in relatively good shape, that inflation still troubled him, and don't look for me to do this again unless the situation deteriorates more. So I don't think it was a perfect decision. I think it was an understandable decision.
Just on that point about if the core of the problem is indeed easy money and bad lending, what do you make of how this will be interpreted over the longer term?
Well, you see, I don't agree with the idea that you were suggesting at the beginning that this is a credit crunch. It's not about credit shortages. It's not about a solvency crisis. This is a crisis of trust and confidence, and that's why it's been so difficult to draw a red line under it, and that's why the Chancellor last night had to take extreme steps, as you described, extreme steps to say, everybody's guaranteed. So the great question is, will this do the trick here in the UK? I think the signs are that it will do the trick, and we'll look back on it as an episode from which lessons need to be learned, but it's not going to have a substantial impact on the economy going forward.
Well, because tell us a bit about what the CBI was suggesting today. I mean, it was far from gloomy, although you...
Yeah, I mean, it looks pretty much the UK economy this year will grow at about 3%, which is a bit above its long-term trend. It was going to slow down next year anyway. We've had 5 bank rate increases. That was bound to put the brakes on a bit, and the world's slowing down a bit. And now it's likely to slow down a bit more, but we still expect growth next year of 2% plus. There are bigger risks than there were in the system, obviously, but the way to bet is that we'll muddle through.
That will muddle through, and the confidence has been restored largely. The Northern Rocks problem is over.
Well, I mean, we obviously hope that's the case. I guess the only issue would be, certainly when you talk to people in the markets, there is a worry about the housing market. I mean, we are, like the US was a year and a half ago, a very indebted country that's very dependent on the housing market for consumer confidence and for a lot of the growth that we've seen. And, you know, one direct consequence of the banks having to take all these losses onto their balance sheets, all of these strange vehicles, is if they do that, they will have less room to lend in the next year or so. And, you know, that could end up having an effect. It will hit borrowing conditions for people with mortgages.
Yeah, Irwin Stelzer, so on that point, I mean, we heard Alan Greenspan over here this week saying Britain is more exposed than we are in the sense that you have a good deal more adjustable rate mortgages. I mean, do you foresee, on that narrow issue of the British housing market, which is very, very important to us, some real problems ahead?
Well, you do have problems ahead. We have problems ahead. I don't think the problems are insurmountable. I think Sir Callum, as usual, had it right. The banks are well capitalized. They've had 5 years of very good earnings. I think that they will, because they've had to take some of this stuff on their balance sheet, be able to lend less. And I think the real problem in America is going to be that after 4% growth, 2% doesn't feel quite so good. But I don't see any calamity here, and I don't see any calamity in Britain, unless, of course, foolish things happen, like taxes go up when the economy is slowing, or something like that. You might have 3% growth. You might have 2%. These doubles in the upward movement of your economy and my economy are to be expected, and I think Alan Greenspan made clear that in market economies these things happen. Look how quickly America recovered from 9/11. I mean, we're way, way ahead of where we were then. That was a much bigger calamity than what's going on now in financial markets.
That is a fair point, isn't it? It was a much bigger calamity, but do you still have a sense that this was a watershed moment because of what has happened over the past 4 or 5 years?
We have never seen anything like this in our lives. We've seen lots. I've seen loads and loads of ups and downs. I've never seen anything like this, where confidence drained out of the system, and it looked for just a brief hour or two yesterday afternoon that there was something bad, seriously bad, might happen. Now there's a red line under that. That's checked. And I think that if we're right about the forward look for the economy, if Stephanie obviously rightly puts a question mark over the housing sector, but if we're right, and Irwin is right, that there's a fair measure of stability, I think we'll look back on this as an exceptional moment, but not one that's changed the shape of history.
But it also might change the shape of bank regulation in Britain, might it?
I think that the deposit guarantee system will have to be looked at. That's clear. I think that the idea of putting regulation under the Bank of England is completely nuts and for the birds. The FSA is the place to keep that stuff done, and I'm sure the bank doesn't want it back.
Okay. Thanks very much. Now, here's a mystery story. Israel bombed something in Syria around 12 days ago. We don't know what, and we don't know why. There's a news blackout in Israel and in Syria. We've heard rumours of everything from a nuclear facility established by North